After hitting a fresh two-month high of 662.50 yesterday against the dollar, we had the rand moving up to 670. This morning we're trading at around about that 675 region, and it's risk in both Europe and the US that we were talking about yesterday that both plagues the currency right now, and it's actually a matter of who's choosing who's the lesser of two evils at this stage.
Indeed, that's correct. We did see that rand bulls ran out of steam yesterday for the second day running at 662, as you mentioned, and that's really supporting our view that the past 7 days' strength of the currency seems to be abating. But we don't believe that the rand will escape the current risk aversion that seems to be engulfing the market for two reasons. Firstly, the rand seems to be positively correlated to risky assets and inversely correlated to safe haven assets, including gold. Secondly, unlike emerging markets, the South African authorities haven't imposed capital holding periods and capital taxes, which really makes the rand very vulnerable to a sudden outflow of portfolio funds, especially if we see an increase in global risk aversion. We did see our short-term target of 676 being breached this morning, and if we see that being breached to the top side, we could possibly see a move towards 686 during the course of the day.
As you've mentioned, we haven't seen the South African government intervene yet, and this in a context where we've had South American leaders come to the fore and trying to put plans together to ward off hot money together as a joint force. Do you see a change in stance being adopted by the South African government at all?
I don't think there's going to be any change adopted at this point. Like as you mentioned before, it's really a play on whether the US situation is worse than the euro situation and what's going to happen to the dollar and the euro. I don't believe that the dollar is really going to fall out of bed, but if it obviously falls out of bed, we could see as you mentioned earlier, currency wars come into play. But at this point, I do believe that the dollar is probably likely to remain fairly weak, but not to the point where it's going to, as I mentioned, fall out of bed at this current point.
Of course, we are looking forward to US GDP figures later this afternoon as well, and that will get markets' attention in a very big way. What are you forecasting in that regard?
We don't expect a very big change in the numbers. We have seen over the past couple of weeks some sluggishness in the US data. We saw durable goods yesterday fall about 2.1% from an increase that we saw previously, and other indicators such as the PMI and confidence data also has shown a very sluggish momentum. So we don't expect the US economy to really show any kind of robust movements, especially ahead of the debt ceiling announcements that we're looking forward to by the 2nd of August. So on the whole, the global economy and the US economy, the growth outlook seems to be pretty precarious at this point.
What about our own growth outlook here in South Africa? We've seen some data come through this morning. June's credit growth at 5.25 year on year, where consensus was for 5.2%. So pretty much coming in line with the expectations there, Shireen.
Indeed, we have also came in line with our expectations. We did see an increase from the mortgage advances, growth in mortgage advances, as well as other loans and advances and installment sales credit as well. Household credit extension has also been increasing, but it seems to be slowing slightly, as well as the credit extended to corporates as well. So we do expect sluggishness coming through from credit growth in the second half of this year. Having said that, we do believe that the growth outlook is still on track for about 3.8% for this year.